Good morning, traders and investors. My name is Roger Scott, and I'm still the senior strategist for WealthPress. Today is Monday. It's January 23rd. The market's going to gear up to open up in about an hour and 37 minutes to be specific with you. Now, it's Monday, and we got to get into all the threats, all the opportunities, everything that's on the table today, and that's what we're going to be doing right now. Now, folks, I want to make sure if you're enjoying these videos, post your comment in the YouTube WealthPress channel. I will respond. If you have a question, post it in the YouTube WealthPress channel. I will respond and you can get an answer there. Or email me at support@marketgeeks.com if it's more personal nature question. All right, as I said, it's 7:53 in the morning. The market's going to gear up to open up in about an hour and 37 minutes. And we've got a lot of things this week on our agenda. Today, the market's pretty empty aside from earnings, which we will get to in a few minutes. And boy, oh boy, when we're talking about earnings today, the floodgates open up. I mean, they open up this week. Tomorrow, we've got the manufacturing index. You've got the PMI. You've got the petroleum report, which I'll talk about more in a few minutes. Thursday, oh boy, you've got jobless claims. GDP, only the biggest report of the quarter. Durable good orders, international trades in goods and services. And then after the GDP, as usual, never fails, you have consumer sentiment. Wouldn't it be smart to put consumer sentiment before GDP? Wouldn't it be a little more useful to have this here? What do I know? Anyways, I'm going to write a letter and throw it in the garbage can as I usually do. Anyways, let's talk a little bit about pre-market briefing, kind of tell you where things are and where we are going. So in terms of earnings, you could see that there's a lot more earnings than last week. And this week, we've got a lot of them. But just to give you some taste of what's coming out today, you've got Brown & Brown, you've got Xeon Bank, you've got Crane, you've got FNB, you've got Timberland, you've got PedMed Express. Not big, huge stocks, but even Chesapeake Financial's coming out today. But as the week progresses, we've got some real big ones. In terms of pre-market movers, Bed Bath & Beyond is down more than 7%. Shouldn't be a surprise to anyone, extending Friday's losses after they received a non-compliance notice from the NASDAQ. That's not good. You've got Lucid Group coming out. They're reporting Citibank resumed coverage, buy rating. They're not reporting, sorry. Lucid Group. But you've also have huge amount of stocks, and I mean market cap when I mean stocks reporting this week. You've got Microsoft, you've got IBM, you've got Tesla, not today, but this week. You've got Intel, all coming out this week. So we've got a lot to digest and a lot to get into. Let's talk a little bit about what we can expect today and what happened on Friday and what the fallout from that is. So the S&P 500 and the Dow snapped a 3-session losing streak, and NASDAQ notched the biggest one-day gain since November as a jump in Netflix, which is a huge FANG stock, and Alphabet shares drove the market higher. Dovish comments from the Fed soothed investors' fears. Now, as I'm showing this to you, I want you to see what happened to. This is the energy. This is the technology sector, still really down. This is right here, the communication discretionary sector. But look at communication sector. That's the sector that has Google and Netflix. Look, it broke up to the upside. Now, is this a meaningful breakout? In my opinion, it's not. I think this is going to come back down, and I think this is just giving the market some excitement. This is the 200-day moving average. Usually it's ugly brown, but today I decided to shake things up and make it pretty blue. So you could see we're still below the 200-day moving average. And in my opinion, let me just show you some overbought levels. This is getting nice and juicy overbought, and it's diverging. And in my opinion, communications are not going to continue moving higher. They're going to break down because the market sentiment is not overly bullish as of yet. That's the first thing I believe. So I'm not as bullish as the market was on Friday on these stocks. On Friday's session, shares of Netflix jumped 8%, a little too much too fast, after the streaming giant added more paid subscribers. Yeah, I saw their numbers. It doesn't look nearly as good. We did a full analysis in the VIP room on it on Friday, and the numbers are just not looking all that great. Alphabet gained 5% after revealing its plans to axe about 12,000 jobs. You guys know that Alphabet, Google pays about $250,000 to train each individual. So for them to cut 12,000 jobs means they're hurting. Allied Bank climbed 20% after the company reported good fourth quarter results. That's promising because this is a consumer bank. They don't do a lot of commercial transactions, and they do a lot of online transactions, which means the online segment, banking segment, may be picking up in consumers, which is good. Comments from federal officials on Friday were positive, which is one of the reasons we saw in the NASDAQ the biggest gain since, I think, November. Federal Reserve Waller supported quarter-point interest rate hikes and warned of a considerable way to go in hitting the central bank's target. And Philadelphia Harker said he expects 25-point hikes increases to be appropriate going forward. And now the market's pricing in 99.8% of a 0.25 base hike. As I mentioned, we've got Microsoft, IBM, Tesla, and Intel coming out. About a month ago, we were expecting 2.9% negative. We're now expecting now we're expecting 2.9% decline. At the beginning of the year, less than a month ago, we were expecting 1.6. So the number is declining. As I mentioned, this week we've got no reprieve from the Fed. PMI, services PMI, inventories, crude oil, core durable goods, GDP, initial jobless claims, core PCE and PCE index, and new home sales. So there's a lot to digest this week. Japan, they surged following Wall Street's rally on Friday. The index's upward momentum was fueled by transports, mining, chemical, petroleum, and plastic. Unlike here, which was taken higher by tech, very big difference. As I mentioned, there's some news on BBBY. They're down 7%, not expected. In terms of the bond market, I was really hoping we were going to get to the 110. We got up to the 109-ish, I think, but we never made it to the 110. And as I said, if we make it to the 110, I'm going to sell because it'll be overbought at that point. The number of stocks making 20-day breakouts right now is 300, which is quite a bit, versus 26 stocks breaking down. I don't think that number is going to be sustainable, and I think that number is going to back away. Also, I want to show you something that we have not talked about in a while, put-to-call ratio. Put-to-call ratio is not overbought. It's now oversold. It's now becoming overbought, not oversold, which means stocks are not in the buyer's market in the next couple of days. They're actually near the seller's market because anything below 0.80 means there's too many call buyers, or call buyers are getting a little too excited. This is all put buyers, right? This is all put buyers, but this is call buyers. And notice where we are. We're at these levels where we don't sustain very much and we turn around. So I'm not expecting this rally to sustain itself because we have a rally for one day and already we're near that level. That's not sustainable. Too many call buyers for the number of put buyers. In terms of individual sectors, which we want to look at right now before we get going, and then I'll give you some key price levels. You still got energy, basic materials, financial, industrial. Notice communication services is moving up really fast. Don't fall for it. There's very little difference between consumer discretionary and technology and communication services. And for technology and consumer discretionary to be breaking up, communication services would go with them. So the fact that there's huge divergence right now between communication services and consumer discretionary and even technology is not showing me anything positive. Also, I want to show you something interesting. If you look at momentum levels, which we'll look at right now, you will see the communication services, look how overbought it is, and look at how many stocks are trading above the 200-day moving average. So right now, if you were to look at this sector, it looks like it's breaking out hard. Look at that. It looks like it's breaking out of the highest price in the last 4 months, right? But look at what happens when we look under the covers. I like looking under the covers. Let's go back to under the covers. Here we go. Communication services, 84 versus 32. Not going to fly. Let me show you how overbought this is in the short term. Look at this. Sorry about that. Look at that. Look how overbought we are. Look at what happens every time we come up to these levels. We come right back down. Meanwhile, the number of stocks trading above the 200-day moving average, 32%. It's laughable. So I'm not seeing anything like that. Now, on consumer staples, which is all the way down here, look at this, 24%. Look at how low we are. So to me, it looks like, based on momentum levels, it looks like consumer staples is starting to come down to the base, And consumer discretionary, which I'll show you right now, is starting to top out. Tell me I'm crazy. Look at that, 33.24, but 36 versus, where are we here? Here, 33, I'm looking at the wrong thing. 84 versus 32, that's the problem. So look at this one. Way overbought, right? We've been up here in the last 7 years, 1, 2, 3, 4, 5, 7 times. 7 times. Doesn't happen a lot. But in consumer staples, sorry, I'm kind of going back and forth, so it's getting a little confusing. My point is, consumer staples looks like they're bottoming out, and communication looks like it's upping. It's upping too much, like it's getting a little too bullish. Now, as you could see right here from where this is down, and you could see right here, where is that? How it's too much upper. See, for communication services, and again for consumer staples, the opposite right here. So very important to see that. So when you're looking at this, take this with a grain of salt. Consumer staples is all the way down here, whereas communication services all the way down up here. They look like they should be reversing over the next couple of weeks, or maybe a month or so. But this is one fragmented market. Now, in terms of price action today, let me take you to the QQQ, and I'll give you some levels for this week, important levels. So let's go here. Let's take this template. Let's go to the editorial. Okay, so looking at price action, I believe we're still below the 200-day moving average in the NASDAQ, and I think Friday's gain was a bit too much. I think we're going to undo it and start coming back into this channel, or maybe come down all the way here to the lows. In terms of the SPY, so keep your eye on the 274 level on the QQQ to the downside. On the SPY, we're abutting the 200-day moving average, and look at what happens every time. We bounce off. I think we're going to bounce off. Keep your eye on the 3850 on the S&P 500, or 385. And on the Dow, I think we're going to come to the 200-day moving average, which is at the 32,400 level. So I'm getting a little more bearish, and as I mentioned something to you, the put to call ratio is now saying that there's a lot of call buyers, not put buyers, and that usually reverses itself. Number one. Number two, the number of stocks making 20-day highs was I think 300. Let me just double check on that. Yeah, 300, and it was coming off. Look, it went 76, 115, 313, 473, 487, came off. So again, I don't think there's a lot of meat on the bull's bones right now, if you will. And I think markets are very vulnerable. And I think we're going to see more downside, especially with earnings not beating expectations. I mean, I'm loving the fact that Google rallied on Friday because it laid out 12,000 jobs. But do you think that's a good bullish indication for Google to lay off 12,000 people? That's about as bearish as you can get. So in the short term, it's bullish. In a few days, it's bullish. But ultimately, it's a very nasty signal. They spent $250,000 to train each one. Anyhow, a lot of news this week, a lot of volatility. Don't be directionally biased right now. Trade both sides of the markets. We've been increasing our short exposure, trading both sides, not holding positions for more than 14 days or 10 business days, doing things to keep you guys on the right side of the market and not be married to any one position for too long. Now, folks, I've got something for you that's going to rock you like a hurricane. I do. Let's face it, the stock market has been really unpredictable. And right now, things are harder to anticipate than ever before. I just talked about Google. They rallied on a firing of 12,000 people. I mean, really? Really? You think that's really bullish for the company? Come on. On February 1st, the Fed is going to make a decision that can cause the markets to either skyrocket or fall off a cliff. And if you're not prepared, your portfolio could literally get obliterated. But Jeff Zananeri, he's got a secret weapon. He's calling it his 2023 financial hurricane battle plan. He's going to rock you like a hurricane with his financial hurricane battle plan. Jeff is holding a special presentation at 2 p.m. Tuesday, tomorrow, Eastern Time, for a full reveal of his financial hurricane battle plan. 2023, folks, is shaping up to be a tough year. Oh, yeah. But if you're prepared, it doesn't matter what the government or the economy is going to do, because you need to trade this market. And Jeff's financial hurricane battle plan will keep you on the right side. Let Jeff rock you like a hurricane tomorrow at 2 p.m. Eastern Time. Don't miss out. It's going to be very, very cool, and I'll see you all there. If you don't know where the link is, YouTube WealthPress channel below this video. That's where you post comments and feedback for me too. Bye. I'm watching all of you, and I hope you all behave yourselves. Bye, guys. Have a great day.